Joining us today is Mr. Amit Chhabra, Chief Business Officer of PolicyBazaar.com. Mr. Chhabra, thank you very much for joining us on Republic TV.
Thank you. Thank you. It's an exciting day with all the stuff that's going on right now.
Well, absolutely. You have big bang reform coming yesterday. To get started, Policy Bazaar, when I think about Policy Bazaar, the first thing that comes to my mind is insurance. And talking about insurance, the finance minister yesterday announced a zero, GST or 0% GST on insurance premiums. I want to ask you, what has changed between yesterday and 22nd September when these reforms will actually be implemented? What changes?
I think a couple of things change. One, health insurance and life insurance is now suddenly become a lot more affordable. So the price comes down by 18%. So that's 18% less money that a customer has to pay to buy life insurance and health insurance. Okay. So that is one change that happens. And I would say that's just one small part of the change that happens. I think the bigger change that has happened is the government has actually stamped and said that health insurance and life insurance is a necessity. It is no longer an optional product. It is no longer something that is good to have. By making the GST, by reducing the GST to zero, essentially the government is saying that one cannot not have health insurance and life insurance. It is a necessity. Everybody must have it. I'll explain why. See, India is while it's growing really fast and the population, so while we are the world's fourth largest economy, on a per user, per consumer, per customer basis or a per citizen basis, our income levels continue to be quite low. There is a significant lack of social security when it comes to specifically the middle class and the lower middle class. Most middle class families are one illness away from poverty, or what happens if the earning member of the family passes away. The family is in total disarray. That is where health insurance and life insurance comes into play. Right. That is what the government is saying, that these are essential products that you must have. And I think 18% price reduction is just one thing. The bigger point is, I think now there will be a lot more awareness about health insurance and life insurance. Mm-hmm. I think the number of people who are buying these products will significantly go up in the next few years. Mm-hmm. And we would see the penetration numbers, which are, at the scale of India's population, still quite low. We would see them growing significantly as we go. That to me is the biggest change from now versus 22nd September.
Okay. Will this be applied with retrospective effect? For example, if I am paying a term insurance premium of, let's say, about 10,000 rupees a year, does my premium now change?
Yes, absolutely. So let's say last year you had paid 10,000 rupees for your term insurance. This year, when you pay your premium after 22nd September, you would be paying the premium without taxes.
Okay.
So you would actually end up paying 8,200. And similarly on the health side as well. So if you have an existing policy, the renewal will be cheaper.
Okay. So does it mean that my policy, the company that has given me the policy, my insurer, so to say, will they do it by default, or do I have to approach them requesting them for a change?
No, so this happens by default. See, there are two components of the 10,000 rupees that you pay. Mm-hmm. There is 8,000 odd rupees of premium, and there was 2,000 bucks of tax. The tax just vanishes. So you pay the 8,200 odd rupees, and that's all, your policy gets renewed. So it's a fairly simple, automated process. You don't have to ask for this. This will happen automatically because see, GST rates are, as we know, governed by the government. Mm-hmm. So one cannot charge GST anymore now. So what you will see is your premiums automatically come down. Mm-hmm. And when you renew or you buy a new policy, automatically you will be paying a lower premium. So it's an extremely customer-friendly, citizen-friendly move.
Okay. I want to ask you about some numbers. If we have to talk about the kind of growth that the insurance sector has had over the recent year, what is the likely boost that these reforms are expected to provide in the next foreseeable future, let's say over the next about 5 years?
I think, the growth rates should ideally double or triple from where we are right now, because the awareness levels are going to significantly grow, and we are already seeing some of the effect of that as we speak. Mm-hmm. But I think more and more people talking about health insurance, life insurance. The finance minister clearly saying that it is an essential product and not an optional product, I think that goes a long way in motivating people that that these have to be bought. See, these are things which historically people have procrastinated for for years and years. There is no urgency, unlike let's say car insurance, where if you don't have car insurance, you get a challan. So
Correct.
there is an urgency that you want it before you step on the road. In case of health and life insurance, there's no urgency today to buy it. You can wait for 1 month, 6 months, 1 year. People wait for years and years. I think this is something which will sort of put it very clearly in the minds of the consumers that this has to be bought and there is no way that one cannot have it.
Okay.
So I think the growth rates would definitely go up significantly as we go forward.
Okay. My one question that has been doing the rounds on different health insurance forums or public platforms as such is that while the insurers will be passing on the zero benefit, zero GST benefit to the customers, some feel that they may face challenges in adjusting premium structures due to the loss of input tax credit. What is that? Could you help us understand that?
Sure. See, today what happens is a lot of the expenses of the insurance companies, on which they pay GST, they are able to take input credit from against the premiums, the GST on premiums that were paid by the consumers. Now, because there will be no GST paid by the consumers, so insurance companies will not be able to take the input tax credit. So if you look at it purely mathematically, yes, there is a loss to the insurance companies. It's a single digit loss, but there is a loss to insurance companies.
Okay.
What the government has also done is so they have also done away with GST on reinsurance.
Okay.
So insurance companies, when they take reinsurance from reinsurance firms globally, they also pay GST. Now that has also been done away with. So that reduces some of the burden from the insurance companies. If you leave that aside, there will still be some input tax credit loss, which the insurance companies will face. However, again, and as we were discussing, the significant increase in penetration awareness will lead to a significant increase in the health insurance and life insurance premiums that companies write.
Right.
The cost structures of insurance companies are in a way that a large part of it is fixed. There's a large part which is variable, but there is a significant part which is fixed. Now, when you basically write higher premiums, the percentage cost will come down because that is a fixed cost. But so you are writing more premiums under the same cost.
Right.
So our belief is that over time this cost will largely neutralize. It may actually give a benefit to the insurance companies only. So we don't see that as a large problem.
Okay.
In the short term, yes, financially one may see that insurance companies do incur a bit of loss. But I feel that with the increased penetration, increased volumes that come in, that will more than take care of it. People are comparing this with demonetization. The way demonetization happened, a few years back. This is the demonetization movement for insurance, because suddenly this becomes a product which nobody can live without practically. So I think it's a large movement for the industry.
Absolutely. In fact, it also aligns well with the government's mission of having insurance for all by 2047, isn't it?
Totally. I think this is a support that the industry needed, and it was an ask for a very long time. But we are glad that the government has sort of provided this push to the insurance.
Okay, Mr. Chhabra, this is out of the GST development, but I want to ask you that what is the ideal amount of insurance, a term insurance amount that an individual should have? What are the different factors that he or she need to consider while deciding the insurance amount? Could you help our viewers understand that?
Sure. There are two rules of thumb that one should look at when you're looking at what is your ideal sum insured for term insurance. One way is to look at your current income and take 10x the sum insured of your term insurance policy. That's one rule of thumb. It essentially looks at the average increase in your incomes over a period of time, and based on that it says that if your current salary, let's say, is 20 lakh rupees, then you could look at a 2 crore sum insured plan, assuming that over a period of time that much money is sufficient to take care of your and your family and your dependents' expenses in case of your demise. So that is one way to look at it. The other way to look at it, and for people who are very young or people who aspire to grow really fast in their in their life in terms of money and career and all. You could also look at, very subjectively look at, how much money will you need in case your family would need in case you go away. So one could also look at it in that direction. There, the 10x may actually be higher. So that depends on one's personal aspirations of, where you want to be, how much do you want to earn, how much luxury or support you want to provide to your family.
Okay.
So there we have seen the number. A lot of people opt for a 20 times sum insured as well.
Okay.
So these are the two rules of thumb largely, but anywhere between 10 to 20 times your annual income is a fairly safe term insurance sum insured to look at.
Okay. I want to ask you a question that probably many may have. Like, for example, I'm asking it considering my own example. If I am paying, let's say, 20,000 rupees premium on my term insurance every year, and I'm right now, so far, I've been paying 18% GST on that, which necessarily means that I am liable to I should ideally be getting a discount of about 3,600 rupees going forward. Will the insurers in any way offer another solution where my premium remains the same but my insured amount goes up? Is that something that the insurers may look at?
So the way the current product structure in term insurance works, what you can ideally do is you can continue that policy at a discounted premium, and you can buy another policy, let's say, to enhance the sum insured.
Okay. So you'll have
let's say if your current policy at 20,000 is let's say costing a certain amount, you can maybe take another 1 crore extra sum insured to enhance your sum insured.
Okay.
That is, I think the current term insurance product allows for that kind of a structure.
Okay. But this will necessarily be implemented from 22nd September for all premiums that would be paid post 22nd September of 2025.
Yes, that is correct. Including 22nd September, any premiums that are paid, they will have no GST. There is no other way. This is now the only way.
Wonderful. Mr. Chhabra, thank you very much. I had some very basic, very user-centric questions that I wanted to get answered. And thank you very much. You really helped us understand that wonderfully. Thank you.
Thank you. Thank you for having me over.
Thanks.